Alrighty, so in this video, which is the 13th in accounting and the 6th of the Maybe series, we're going to be covering dividends. And dividends are nice because they're actually really, really simple. Now, the main thing that you have to recognize with dividends is that a dividend to your shareholders is not going to show up on our income statement, right? And this is kind of really important here. And the intuition behind it as to why dividends don't show up on our income statement is a dividend that you pay out from your business anything related with a P&L, right? Does that kind of affect your the amount of profit that you had from that business, or is that a loss that you had at that business? No, right? It's not a source of income for the business, nor is it an expense, right? So dividends are not an expense. It's just a payment that's made out to the shareholders, right? So when we walk through the three statements here, we have our income statement, we have our balance sheet, we have our cash flow statement. And let's say that we issue $100 worth of dividends. We're not going to see any changes on our income statement because that isn't a payment in terms of our income, right? Nor is it an expense, right? So with that in mind, where is this dividend going to come from? Well, it's going to be cash out of our pocket that we give to our shareholders. So under our cash flow statement, under cash flow from financing, we're going to see a dividend line item, and we're going to adjust that by 100, right? So our overall cash is going to be down by 100, right? So when we move on to our balance sheet, we have our assets, we have our cash balance that we know has been adjusted down by 100. We have our liabilities. Did our liabilities increase? No, not at all, right? A dividend is not a future obligation, right? It's just a payment that you made. Do you have to make dividends? No, you don't have to make dividends, right? It's kind of like a little bonus, right? It's not like you're paying off like a loan or something like that, right? Which in that case would affect your liabilities. This is simply just a payment that's being made to the shareholders. So our cash is going to go down in our shareholders' equity. Well, what did we do? We decreased our shareholders' equity. That's $100 that is no longer attributable to the owners of the business. This is money that is leaving the firm, right? So because of that, that's going to be a decrease in our shareholders' equity, right? So our cash goes down and our shareholders' equity went down. So let's check our formula. We see that our assets went down by 100 and our shareholders' equity went down by 100, right? So that's essentially the intuition behind paying out a dividend. It's a relatively simple concept, at least on the three statements. So I hope that's been helpful.